Hello everyone, I am back again with another report, that is cash flow statement and analysis. So you can see here I have prepared this cash flow statement, and for the analysis part I have done this data visualization here. So you can see here I have prepared these tiles and mentioned various ratios here. Also prepared these charts, also mentioned some key points here to understand how cash flow affects our business. So apart from preparing traditional way of cash flow statement, I have also done this data visualization to highlight some important key factors, key indicators and these key points so that management can easily view and analyze the data and quickly take their decisions, because generally people in the management don't have much time to look into detail and analyze the report. So to prepare this report with dashboard, I have also prepared some background data. So first sheet is for dashboard, next sheet is for supporting statement like P&L and balance sheet, and the third sheet is for information. Here I have mentioned formula to prepare ratios and other data related to formula and data for charts also here. So now let's come back to this dashboard sheet and quickly prepare the cash flow statement. There are two methods to prepare cash flow statement. One is direct method, another is indirect method. Direct method is less commonly used, indirect method is more commonly used. Direct method is more transparent compared to indirect method because real cash transactions are required and actual cash inflow and outflow reported in direct method. While in indirect method, non-cash transactions and net profit are adjusted to arrive to net cash flow. Now, direct method is generally used by small companies to understand cash liquidity and cash generating ability, and it also provides greater insight compared to indirect method regarding how actual cash inflow and outflow happening in the business from operating activity. But because granular data collection is required, and in big and medium enterprises or companies generally there are high data volume is there, so it is very difficult for them to collect the data and prepare the direct method cash flow statement. So they generally use indirect method of cash flow statement. Also, indirect method is quick and easy to use even with large volume of data, and for reporting and compliance purpose generally indirect method is used. So in cash flow statement there are three main activity, that is operating activity, investing activity and financing activity, and transactions are segregated according to these three main activity. While preparing the statement, we need to keep one important point in mind, that any kind of cash outflow is negative and any kind of cash inflow is positive for the purpose of cash flow statement. Now to prepare the statement, we need some supporting statement also, that is balance sheet, P&L or trial balance. So let's start preparing this cash flow statement for the year 22-23. And to prepare this statement, we also need previous year data as well. So let's start working on this. First, in operating activity, net profit after depreciation is equal to net profit 36190. Next, depreciation 31332. Next, changes in creditors. So go to balance sheet. So changes in creditors, you can see here creditors increased compared to previous year, means we have paid less to vendors compared to previous year, so less cash outflow happened, cash outflow decrease, it is positive for us, we will show it as a positive number. Next, expense of financing activity, we have to add back here and we have to mention it in financing activity. Since in P&L it was deducted, to calculate net profit we have to add back here. Next, interest on other loans and cash credit we have to add back. Next, changes in inventory. So changes in inventory, here closing stock, we can see it has increased. Increase means cash outflow happened to purchase more inventory, which is negative for us, so we'll show it as a negative number. Next, changes in debtors. So debtors, here you can see increased compared to previous year. Debtor increased means client has paid less, so less cash inflow happened, cash inflow decreased, so it is negative for us, show it as a negative number. Next, income of investment activity, we need to show in investment activity, and we need to deduct here because it was added in P&L to calculate net profit, is equal to here income interest, we have to show it as a negative. So you can see here 42062 is cash flow from operating activity. Next, investment activity. First, income from investment we have to add here, which was deducted in operating activity, is equal to income interest. Next, changes in fixed asset. So we'll go to balance sheet. So changes in fixed asset, here you can see fixed asset immovable, there is no change, so we will not consider it. Next, changes in fixed asset in movable. So there are some changes, fixed asset movable. So you can see here 2,66,000, 2,81,000. So fixed asset here increased. So to purchase this movable fixed asset, cash outflows happened. So we have to show it as a negative here. Also we need to consider depreciation because it was deducted in P&L. So 47,000 negative here. Next, changes in investment is equal to, we'll go to investment. So investment you can see here increased compared to previous year. So to make investment, cash outflow happen, which is negative for us. So we will show it as a negative number. So you can see 48878 is the negative cash flow from investment activity. Coming to financing activity, first is changes in loans and liability. So changes in loans and liability, here we can see secured loans and unsecured loan both reduced. So when we take loan, cash inflow happened, but when loans are reduced, cash inflow decreased. So it is a negative for us, so we'll show it as a negative number here. Next, changes in outstanding taxes. So duties, taxes, provisions increased and we have not paid yet, so no outflow happened, so it is positive for us. Changes in loans and advances. So loans and advances, here we can see it is increased compared to previous year. So when it is increased means we have given more loans and advances, so cash outflow happened, which is negative for us. We'll show it as a negative number. Next, changes in other current asset. So other current asset we can see here it is increased compared to previous year. So to purchase some asset, cash outflow happened, which is negative for us. Interest expense. Interest expense is an expense. Cash outflow happened when we pay interest, which is negative for us. You show it as a negative number. Reduction in capital. So we go to capital account here. Drawings, LIC and other reduction, income tax are cash outflow for us, which is negative. So we show it as a negative here. So you can see finally 42447 is the negative cash flow from financing activity. We have to add here opening balance, previous year closing balance is the opening balance for current year. So finally you can see closing balance is 31916. To check whether our final calculation is correct, our report is correct, here I have calculated the difference. So cash balance as per our cash flow statement and balance as per balance sheet, both are matching 31916. So here you can see there is zero difference. So our report is correct. So finally, you can see company has good cash inflow from operating activity. So company has good generation of cash from core business activity, but there is higher capital expenditure and high finance cost. Because of that, cash outflow happen from investing and financing activity. So net cash outflow 49,263 happen. So from 81,179 opening balance, 42,062 added from operating activity, but because of outflow from investing and financing activity, cash balance reduced to 31,916. So now let's come to this analysis part. First of all, you can see I have mentioned various ratio in these tiles. First is operating cash flow ratio 0.20. Operating cash flow ratio formula is operating cash flow divided by current liability. 0.20 means company is generating only 20% of cash to pay its short-term obligations. Means for every 1 rupee of obligations, only 20 paisa is available to pay from operations. Means there is liquidity stress. Next is cash flow to debt ratio 0.21. Formula is operating cash flow divided by total debt or interest expense. 0.21 means company is generating only 21% of cash to pay its total debt, or you can say for every 1 rupee of debt only 21 paisa is available. Means company is highly dependent on external debt. Next is free cash flow, which is negative here. Formula is operating cash flow minus capital expenditure. Now negative free cash flow means company is spending more than it is generating. Here to make investment, company has spent more than it is generated cash from operation activity. Next is cash conversion ratio 1.16. So which is good actually. It is slightly more than 1. It means that company is generating good cash compared to net profit. So now let's look at these charts here. First one is comparison of all three activities. This is 3D column chart, and this is to show comparison between all three activities. It is operating, investing and financing activity. So first one, operating activity, it is positive cash flow, so I have shown it as upward. Investing and financing activities negative cash flow, so I have shown it as a downward with a red color, positive is with green color. And I have done some formatting and changes in shape of the column here, and also done some formatting for labels and all. Next is cash movement chart. This is waterfall chart actually, and this to show how cash move between three activities here, from opening balance to operating, investing and financing activity, and how we arrive to closing balance. So there was opening balance of 81,179, inflow of 42,062 in operating activity, which was positive, and there is negative cash flow of 48,878 in investing and 42,447 in financing activity, and finally closing balance arrive at 31,916. So this is waterfall chart. I have also done some formatting and changes in color and all here. Third is pie chart for outflow composition. So this is to show where major cash outflow has happened. So as you can see here, 40% has gone to working capital. So closing stock and inventory increased. So there is 40% in working capital, 30% in fixed asset. So 30% cash has gone out for fixed asset purchase, 9% in reduction in capital, interest expenses 16%, investment 5%. This is pie chart exactly. Finally, I have mentioned some key points here. So let's look at it. First one is positive from operations. Company is generating healthy cash from core activities. 42062 is positive cash inflow from operating activity. Second, high capital expenditure. 47,000 in fixed asset indicates expansion or asset replacement. Next, high finance cost. Interest expense 24,529 is 58% of operating cash flow, that is too high and showing debt burden. Fourth one, working capital stress. Large increase in inventory and debtor reduce liquidity. Fifth, And fifth, overall cash burn. Despite strong operations, investing and financing activity drain cash and reducing reserve. So finally, this is all about cash flow statement and analysis. Hope you got better concept of how to prepare a cash flow statement and analyze the same. Hope you like my video. Thanks for watching.